the right stock at the right time.
Hello and welcome. This is all you need to know. I am Agam Akil. Let's start off by taking a look at the global markets at this point in time and see how Friday was for the American indices, which did see mixed movements. As you can see, the S&P 500 and NASDAQ closed in the green, whereas marginal losses for the Dow Jones. European indices, on the other hand, did suffer significant losses. In fact, a lot of these indices were down by well over 1% in trade. But when it comes to Asia, it is showing some amount of weakness. As you can see, the Nikkei as well as the Hang Seng declining by around anywhere between 0.5% to 0.4%. But what does that mean for the SGX Nifty? At this point in time, we're seeing an advance of around 27 points. Let's take a look at the ADRs then. And Dr. Reddy's, Tata Motors, Infosys, along with Wipro did advance. We are likely to see Wipro open with strength in today's day of trade on the back of its big order win. And other than that, we had, marginal moves for the likes of HDFC Bank, ICICI, and Vedanta. When it comes to our own markets last Friday, Nifty was largely flattish, marginally in the green. However, when it comes to the mid-cap and the small-cap indices, advanced and outperformed the major indices. Marginal losses for the Nifty Banking Index. On the other hand, the Nifty PSU Bank Index advanced by around 0.6%. Among many other variables that we're keeping an eye on, Nifty Pharma and the IT indices advanced. In fact, the Nifty IT index was up on the back of something like an Infosys or Tech Mahindra. And on the other hand, on the losing end, energy index was down around 1.2%. We'll be watching out for power stocks as well as realty stocks in today's day of trade following the construction ban. Of course, we await more clarity, but for now, we're likely to see some sentimental weakness when it comes to a lot of these stocks. For institutional flows as well as DIIs, we really didn't do too much last Friday. Just about 200 crores on a net basis with a buy and sell going in. But when it comes to contributors, Infosys, L&T, along with Tech Mahindra and HCL Technologies stand out, considering we saw so much strength come through. On the other hand, Reliance continues to bear down on the index by as much as 29 points. Can this change today? Well, let's wait and watch. But let's take a look at the futures and options space then. And we do have, 6.5% increase in open interest when it comes to the Nifty. On the other hand, unwinding in the Nifty Banking Index. When it comes to the other variables that we're watching out for, open interest with the maximum OI is still at around 11,600 put and the 11,800 call, and that's a 200-point range within which we're expecting the Nifty to move within. On Friday, we did see a lot of activity around the 11,600 put, and both the strikes, of course, and puts around the 11,700. This is, of course, a new series, so we'll watch out for more development through in addition of the open interest. But the Nifty put call ratio will remain largely unchanged at around 1.55. It's the same for the Nifty Banking put call ratio at around 0.98. And when it comes to a few stocks that we're watching out for, Mindtree saw fresh longs. The underlying advanced by around 6%. Other than Mindtree, we also have something like a Yes Bank, which actually took a knock of around 5%, considering the uncertainty over Rana Kapoor remaining the CEO at the bank for a prolonged period of time. And of course, finally, we're talking about Page Industries, which did see a little bit of profit taking. Well, from the levels of around 36,000 last week, it's come down to around 34,400. Watch out for this one as we move into trade. And finally, KPIT Technologies was the other one, which did see fresh longs come through. So a lot of stocks to keep an eye on, but we're likely to see some consolidation moving in. But with that, let's go across to Bloomberg's Paul Allen for the top international headlines.
UK Prime Minister Theresa May has seen her Brexit strategy come under friendly fire from a Conservative lawmaker who criticised her plan for a hard split from the EU. Most of the criticism directed at May's proposal has come from hardliners who want to distance the UK from the single market. But a former minister now says he can't support the plan either because it will humiliate Britain and let Brussels dictate the path of departure. Italy's rating outlook has been cut by Fitch over the populist government's fiscal plans. The agency lowered its credit outlook from stable to negative, but maintained its long-term rating at BBB, a decision lauded by ministers as proof of the credibility of their spending plans. The government campaigned on tax cuts to infrastructure programs, which analysts say could breach European Union rules. Iranian oil exporters are tumbling as key buyers in Asia order less crude in the weeks before US sanctions come back into force. Tehran shipped just over 2 million barrels of oil and condensates per day in August, the lowest amount since March 2016. Sanctions are due to take effect on November the 4th, and Iran has vowed to close the Strait of Hormuz to all oil tankers if its own deliveries are restricted. Global news 24 hours a day on air and at TikTok on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Paul Allen. This is Bloomberg.
I don't think it's capitulation at all. We put a note out a couple of weeks ago, a little bit more than that ago, where we said that we thought a lot of evidence that sentiment, of course, has deteriorated badly in EM, but I think we're far from capitulation levels. I think what you've seen in August is two phases of selling, frankly. You had a very, very weak couple of weeks at the beginning of the month, which was mainly driven by the crisis in Turkey, which of course had spillover effects on the euro being weaker, dollar being stronger, which tends to hurt all emerging markets. Then we had a bit of a pause with a nice rebound as the dollar softened, and now we're back into a crisis environment, if you like. I think we shouldn't overdo the crisis environment. It's very specific, I think, what's going on here, and it's making the asset class look obviously rather weak at the moment again.
Well, let's break down some of the brats, and I want to start first off with Turkey to kind of look at what has happened to that currency so far. Record low after record low. Central Bank Deputy Governor said to resign, not going to participate in traditional monetary policy like in Argentina, but kind of on the sidelines. But that's not working either. Is there any solution on the monetary front for Turkey?
There's no doubt the solution in Turkey on the monetary front is a sharp increase in interest rates, combined with much greater confidence than there is today about the, should we say, the prudence generally of economic policy. Fiscal policy is too loose, monetary policy is too loose. Obviously, the situation in August was exacerbated by the political spat that broke out between the US and Turkey. And of course, you've had a strong dollar, which, as I've said many times in your program, is always a problem for EM. And these things have made what were poor fundamentals in Turkey really stand out anyway, with a large current account deficit financed by short-term capital flows. There has not been an adequate response, in our view, from the Turkish central bank. So the most important thing you could do in Turkey to really improve matters there and start to bring some money back would be a sharp increase in interest rates, and frankly we're still waiting for that.
Well, stock of the day today is Graphite India. All eyes on that counter, given that the company's Netherlands subsidiary has acquired up to 46%, signed an agreement of acquiring up to 46% stake in General Graphene Corporation. Now, Graphite India, that's an unlisted US company involved in graphene development. The company overall will be investing $18.6 million or around 130 crore in multiple tranches in cash. Objective obviously is to enter the high technology business, and the financial advisor for this deal is Lodha Capital Markets. What's General Graphene? It's basically into the development of graphene sheets for commercial use. It's mainly used as a building block for graphite, and it's chemically identified to both graphite as well as diamond, but then the properties are a little different than what they are. Used in the, basically the application is electronics, which is a screen touch, and then you have the medicine and biosensory devices. But if you look at the balance sheet situation, it's a small acquisition comparatively for Graphite India, but would have some bearing on the stock. Cash and cash equivalents as of FY18 stood around 41 crore. Bank balance stood around 15 crore. And in terms of the long-term borrowings, the company has nil, but then the short-term borrowings stand around 272 crore for the company.
Let's shift focus to currency and bond markets, also commodities. Talking about Indian rupee first, the rupee extended its downward movement on Friday and ended at a record closing low for the third straight session at 71 levels against the dollar. Remember, the rupee has depreciated over 3.5% last month, thereby marking its biggest fall in nearly 3 years. Rising crude oil prices, strong dollar demand from importers, along with a sharp sell-off that we have seen in Argentina and Turkey, has been weighing on rupee of late. Traders on the On the bond market front, sovereign bonds extend declined for the fourth straight month, largely weighed by currencies drop. The benchmark 10-year bond yield ended at 7.95%. Remember, the yields have risen almost 18 basis points last month. Traders do believe that strong GDP growth is negative for the bond markets as it increases the expectations of a policy rate hike by RBI in the next meeting. On the global front, dollar index extend gains for the fifth straight month, and it now trades higher for the third straight session, well above the 95 mark. That apart, if you see euro and pound, both are trading lower versus the dollar in the early Asian hours today. Remember, both euro and pound ended over 0.5% lower versus the dollar on Friday. And lastly, speaking of dollar rupee, now it is trading flat in the non-deliverable forward markets, which indicates a flat opening for Indian rupee in today's trade. Having said that, let's shift focus to commodity space. Good morning, Jayesh. What cues are you picking up?
Morning, Saloni. It was a mixed month as far as the entire commodities basket is concerned, starting off with oil prices, which managed to post a monthly gain in the month of August. In fact, Brent oil posted its largest monthly increase since the month of April. And this is despite the fact that Saudi Arabia has boosted its output in August. So, on the back of this, prices did manage to see an uptick. But moving on to the base metal space, all of them except for lead closed lower on the London Metal Exchange in Friday's session. Now, copper posted its longest monthly losing streak since May 2017. In fact, open interest for the metal is now close to its lowest level in about 19 months. As far as some of the other base metals are concerned, nickel was down about 3.7%, and it was the third straight monthly fall that we saw for this metal. Aluminium, on the other hand, snapped its 2-month losing streak, and zinc posted its loss for 7th consecutive month. Now, if you look at the Shanghai Futures Exchange, we are seeing mixed trading come about in early Asian hours, where zinc is trading mildly positive, but Shanghai copper is down about 1%. Shifting, and lastly, we have the gold prices, which in fact posted its 5th straight monthly drop on the back of increase in the dollar index and a rally in the equity markets that we have seen recently.
Well, amongst the stocks to watch is Wipro, which has bagged its largest ever deal of $1.5 billion. This, over a 10-year period, will add about 2% to incremental revenues every year. So watch out for that name. We also have Sun Pharma, which will be in focus. Now, US FDA has completed the audit of its Halol plant with no observations. That's what two people familiar with the matter have told Bloomberg Quint. It's a Bloomberg Quint exclusive. The company, of course, refused to comment on declined to comment, but Sun Pharma is a stock to keep an eye out for. Also, a lot of divestments and acquisitions that we saw over the weekend. You have L&T Infotech, which will be in focus as the parent L&T has proposed to sell 3.41% stake in the company via an offer for sale. Now, the OFS price has been set at 1,700 rupees a share. That's about 5 to 6% discount to Friday's closing price, so that may weigh on the stock. You also have Godrej Consumer, which via its UK arm has divested its entire stake in the UK arm for 34 million British pounds. That's about 300 crores. So that's a stock to watch out for. As also Ramkey Infra, which will sell its entire holding in NAM Expressway to Cube Highways. This is going to be for about 140 crores, and this will also mean that all its liabilities will be sold. And what is important is post the sale, the consolidated debt of the company will reduce by about 1,529 crores. So that could react positively in trade today. You have LT Foods, which will be in focus as well. The board has approved an investment of 140 crores by India Agribusiness Fund 2, and that is in its wholly owned subsidiary Nature Bio Foods. And finally, you have Moil India, which has revised the prices of different grades of manganese ore and other products which affect from 1st of September. So the prices of ferro grade have been raised by 5%, and when it comes to the other grades, they have maintained or extended the discount. So let's see how that one reacts. But those are a list of stocks that you need to watch out for.
we're happy that, and this was expected to a very large extent because of the base effects of the previous quarter, the corresponding quarter the last year. Remember, this was the quarter just prior to the imposition of the GST. So there was a lot of inventory destocking that had happened, and then this is what, so some part of this is due. But after having said this, beyond the base effect, I think there is also a significant bit which is contributing to the current growth. So as you said, a large part of this is coming from manufacturing, from industry in general, manufacturing in particular. And this was evident. I mean, you know, the numbers that we based on, the IIP numbers were strong, if you remember, and the initial numbers that we saw from the companies in the first quarter. So those company results, I mean, the net sales, the profit margins, etc., which is an indicator of the value added that goes into the GDP. So even that showed a fairly strong growth.
Certainly an upside surprise. We were expecting growth to be closer to 7.5%. So this has certainly come as an upside surprise to us. Part of what has grown faster than what we forecast is the sectors that did have a favorable base effect. So manufacturing, where we were looking at a slightly different, a slightly lower number based on what we thought in terms of how many industries actually had pricing power, and the ones that didn't, offset by the base effects related to GST, etc. So that's one part of it. Secondly, the agricultural number has come in a little bit higher than what we were expecting. And the third upside really is coming in from the public administration, defense and other services, which is really the balance of government spending in terms of the center and the states really getting reflected over there. So I would say that these are the three major reasons. One, sectors that did have a favorable base effect growing faster than what we had forecast. Second, agriculture, and third is really coming on the back of government spending. So while this number is certainly very positive and it's very welcome, I think there are still some concerns that are lingering in terms of whether this rate will sustain in the coming quarters or not.
Now, in a negative development, all construction activity has been banned across Maharashtra, Madhya Pradesh, Uttarakhand and Chandigarh. Now, this is as per an interim order that was released by the Supreme Court. And, this is on the back of the states failing to comply with, drafting a policy for the solid waste management treatment. However, the order, there is some bit of clarity that's needed. One, whether this order applies only to new projects or all construction, that is yet to be determined, and whether the order impacts only real estate companies or the entire infra space on the whole. However, if you look at, what's the impact on an immediate basis, for that we did speak to some industry personnel, and in fact we have Anuj Puri from Anarock who said that real estate could be, impacted because there is already a delay of projects which are worth about 4.64 lakh crores, and that is likely to get pushed even further. Now, the other companies like cement players, steel companies, tile makers and the pipe makers, along with the electrical equipment makers, are some of the other sectors, broad sectors that could see an impact on account of this. However, the next step would be that the government of Maharashtra in fact approaches the Supreme Court to get a stay on this order. But as per the interim order, the next hearing of the court is scheduled for 9th of October. So till then, we have all the construction activity which will be halted in these states and union territories. Clearly a negative development for the entire space.
Well, it has been a mixed month when it comes to auto sales, with a high base catching up with some of these players. India's largest car maker, Maruti Suzuki, reported a sales growth for a second consecutive month, about a 3.5% degrowth, which is the highest in the last two years, coming in at about 158,000 units, which is significantly lower than the Bloomberg Quint poll of 170,000 units, which the company attributed to the tragic floods in Kerala and heavy rains in other parts of the country. M&M Auto came out with a good set of numbers, a 14% growth on a year-on-year basis, coming in at about 48,000 units, very much in line with the Bloomberg Quint poll of 48,500 units. Their passenger vehicle sales were largely flat on a year-on-year basis, but the commercial vehicles business that posted a strong 25% growth. Ashok Leyland, another commercial vehicle player, which reported an extremely good set of numbers, 27% growth in volumes, coming in at 17,400 units, significantly higher than the Bloomberg Quint poll of 15,700 units. Both its verticals, MHCV and LCV sales did extremely very well, with the MHCV sales being much higher than the analyst expectations also. Escorts, the tractor maker, reported a 5% growth in volumes, and Tata Motors continues to see the momentum with sales increasing by as much as 27%, with both the passenger vehicle and commercial vehicles business doing very well for the company. On the other side, the two-wheeler makers, well, Hero MotoCorp reported just a marginal 1% growth in volumes, and Eicher Motor reported just a 2% growth, coming in at about 69,400 units, which is far less than the Bloomberg Quint poll of 75,000 units. Both of these players saw their sales impacted because of the tragic floods in Kerala, but TVS Motors, on the other hand, came out with good set of numbers, and 8% growth, coming in at about 343,000 units, with the LCV and three-wheeler sales seeing a good 56% growth, which worked for the company.
Well, let's get your check on the top 3 stocks to watch based on Friday's market data that was released. The first stock on the list that you should have is Yes Bank. Now, that was down about 5% in trade and saw delivery selling in excess of 1,200 crores. The delivery volume managed to more than double than itself as compared to its 5-day average, while the total volume surged about 137% as compared to its 5-day average. Second stock to watch out for, Lupin. Now, that was up about 4.2% in trade and saw delivery buying of nearly 140 crores. The delivery volume also managed to double as compared to its 5-day average, as the total volume increased about 118% as compared to its 5-day average. Last and final stock, Piramal Enterprises. Now, that was up about 2.5% in trade and saw delivery buying of 126 crores. The delivery volume surged about 100% as compared to its 5-day average, and the total volume saw uptake of about 62% as compared to its 5-day average.
Well, it's the start of the week and there's lots of news that has come over the weekend. In fact, several stories that you can read on the website. Here are just a couple of them. That's BloombergQuint.com. The country's gems and jewelry exports contracted by about 5% to $10.64 billion in April to July this financial year on account of a demand slowdown in major developed markets. And the Competition Commission of India has dismissed 2 complaints against DLF alleging abuse of dominance against realty major DLF with regard to conditions of the sale agreements of residential apartments in Gurgaon. That's all you need to know going into trade today. Up next is Indian Open, so do stay tuned. This is Bloomberg Quint.